Tackle today, Coach Matt, Coach Mark, the Justice Brothers, bringing you all of the major story highlights today. Japan bends the knee, Disney profitable on their streaming business. We're going to break it all down. Matt, over the last 24 hours, the source of so much of the market stress in the last week, which has been the carry trade, Japan came out with their first statement from a board member of the Bank of Japan. Can you imagine the Fed going a week without speaking here? Uh, but the first comment was like, we're not going to raise interest rates if it's going to cause market stress. Widely viewed as a bend the knee, capitulate to markets moment. How do you view that? What do you see from a technical perspective? Is the carry trade stress over?
Very interesting and very unbelievable that the Bank of Japan did not know it would cause market stress by raising interest rates. It was very, very well known the yen was the number one currency being used in the carry trade, and it is extremely well known, specifically by the Bank of Japan, the historical nature of the market reaction when the Bank of Japan does in fact raise rates. So I find that dubious from the Bank of Japan, but I also find that to be the obvious thing the Bank of Japan would say in this environment from a technical perspective, and that is how I see this. We're looking at a little bit of an overextended bounce on the U.S. dollar versus Japanese yen pair, and the reason we're looking at that is because that obvious chart and that trade reflects that carry trade and the unwinding of that carry trade. This is the first day in that environment since we've been dealing with it over the last 4 trading sessions that we saw some degree of upward movement in price. And that upward movement in price just so happened to come from a fairly overextended to the downside type situation. So you could be seeing some profit taking on the short side of the equation here, a little bit of rebalancing, but I wouldn't read too much into this price movement coming from the low point in a bearish downtrend. That's about as customary as we see in trending analysis and pattern development within a trend. Is overextended typically gets a bounce. Here, overextended gets a bounce, and I think you could kind of rinse and repeat a little bit of that when you're talking about the indexes here as well. Looking at a little bit of a bearish downtrend in the short term, the S&P 500 is trading fairly similar to that of the U.S. dollar, Japanese yen pair. That gets a bounce here today. We also get a bounce out of the S&P 500. We get a bounce out of all of the indexes here today, and it was pretty well known last night we were going to get some bounces as we did see the Bank of Japan bend the knee a little bit. We saw the yen, the dollar yen trade fairly aggressively. We saw the futures in Japan jump up a little bit as well. But this is also very expected as we are dealing with a little bit of that volatility. And this is the same type of energy in terms of volatility, Mark. We haven't really seen a changing volatility. We might like the green candle, but the green candle is still a volatility-based candle. And so
Big up, big down, right? Big up, big down.
Big up, big down, same energy. And so you want to work that out. And so we're not real surprised by the technical moves here in the marketplace. We dialed that kind of in as we were talking about reversal analysis last night in the Tackle Trading Coaches show. We do expect a little bit of a bounce here, but that's where it does get interesting, Mark, because in pattern development, you're going to want to see this work itself out in terms of the bearish retracement. And then you start getting into real interesting technical formations. Do we see a bearish retracement form with a little bit of slowing momentum and a pivot at the 9 EMA? Do we see bear stop out analysis? Do we see a double bottom? This is the environment from a technical perspective, meaning most of the indexes are around its 200-day moving average. Most of the indexes got fairly overextended in the immediacy of that Japanese yen carry trade getting unwound over the weekend. All the indexes were overextended in that environment. And so we're getting an overextended bounce, and that's how I think we should see it.
Yeah, absolutely. Not any economic news of note today. Tomorrow is unemployment claims, and note that as we shift from yen carry, remember one of the stories in the market was slowing growth, labor worries. We get our first look at labor data since that last week in the unemployment claims tomorrow morning. Any thoughts on unemployment claims before we shift to stock and news?
If there was a week for them to come in and give us that nice little beat on the initial claim side of the equation, it would be this week. But we got an expectation right around 241 mark, and that's kind of where we have seen the initial claims report over the course of the last little bit, in that 235, 240, 245 range. That's not a good look for initial claims when we're starting to see those trends start to go up. Obviously, that's why we're worried about the labor market just a little bit. Nothing too crazy. We're still dealing with 4.3% unemployment, but the market doesn't think about the here and now. It thinks about the future. And so this data coming out tomorrow, I think, is one of the more important data points we've gotten since last week's labor market number that came in that really kind of created that big worry regarding the labor market itself. And so a big, in a week where there's not a lot of data, initial claims is going to be a fairly important report.
Yeah, let's get to stock in the news. Earnings season continues. Disney reports their first ever quarter of profitability on their streaming business. Matt, what do you got for us today?
Yeah, they did. They had to cheat a little bit there, Chucky, to get that. They had to kick out ESPN Plus out of the reporting structure of that. But you know what? To each their own and how they find their profitability, and that's what Disney does. But if that was a real number, it would be done with a little bit better gap on Disney's report here today, because Disney had a decent report that came in with a 15% beat. Revenue also came in above the expectation. They increased guidance just slightly, and so they had a good report, but they kind of manipulated the data a little bit to get that good report. From a technical perspective, you recently violated a fairly important support level. You're kind of in no man's land with a massive and major support level right around 80. If you ever do get that 80 handle, that's a really good support level. And this was not a terrible report. Had some good on the streaming side of the equation, bad on the park side of the equation. JP Morgan did come out and reiterate their price target at 135, which at $88 implies a lot of value to the top side, but a tough technical environment and still a tough fundamental environment for Disney here.
Yeah. Who else you got for us?
Yeah, we got some tech plays here today, Mark, that came out into the market, and that did interest me because tech is one of those areas of the market that we do expect to see a little bit of a battle for the relevancy of support, as it is battling that 200-day moving average in the NASDAQ here. And we do have some tech plays out there. Specifically, Shopify, for example, came out and had some decent beats in the market, gapped up fairly strong into a lot of chop Shopify did. But once again, they reaffirmed guidance. They had a 30% beat on their EPS. That's really good. Revenue also topped. When you are looking at Shopify technically, you got overhead resistance right here at 68. You got overhead at 80. The problem with Shopify is the strength of the gap and the speed of the movement to the downside. You just have a tremendous amount of overhead here on a lot of different time frames. And it does clean up on the daily chart at 70, but it still has overhead from a technical perspective. So that would certainly need to be dialed in. Outside of the Shopify, specifically in the tech space and AI type scenarios, you have Supermicrochip Computer coming out today. And they were probably the biggest name that reported here today in the AI space and the semiconductor technology areas of the market. Supermicrochip came out with a 22% miss. They also came out with a slight miss against revenue. They did increase guidance for 25, but there was some concern over that. Some good news out of Supermicrochip. This was not so recently a $1,200 stock. They announced a 10-to-1 split as well. And so the split is really going to get a little bit of love coming out of this. But from a technical perspective, you can't miss like Supermicrochip did in this environment and stave that off. And so you're dealing with a little bit of gap down type situation. Yeah, you're looking at a bearish downtrend and just some nasty, nasty violations that would lead you to believe that we're going to be seeing a little bit of lower prices on super microchip computers. So a little bit of a stay away on that front with the super microchip computer report. Fortinet came out today and just had a really good report. 39% beat, 10% year over year revenue increases. They raised forward looking guidance. Really good report coming out of FTNT. Problem on FTNT is, again, we're seeing this across the board on some of these reports here today. A lot of overhead, Mark, on the immediacy of the moves. When they move back up into resistance, you see that overhead. And so that would certainly need to get dialed in just a little bit. And then Toast out of the AI space, it's a nice little AI name as well. They came out and they reported a pretty decent beat. They came in with a profit. They were expecting a loss of 2 cents. They came in with a profit of 2 cents. And that profit was the first profit it showed in earnings for a little bit of time. And so it's having it gap down on the actual raw numbers, trying to fight back a little bit. But if you're looking at Toast, the number here is 28. Keep it on your radar. It's got a lot of junk between 22 and 28, really kind of a nothing to see type environment. But when you come out to the longer term chart, 28 stands out. Toast has a good mid-tier opportunity, but it is a mid-tier opportunity breakout, and that's about it from a technical perspective on Toast. And then a couple stocks outside of the technology areas of the market. Devon came out in the energy front, coming from a support level, did beat on pretty decent.
Second positive earnings response I've seen MPC the other in the last couple of days. Healthy.
And I would say the exact same thing here on Devon that I said on MPC the other day, Mark. Really good beat. When you're comparing against the market, not so much. When you're comparing against other energy components, MPC was a standout this week in energy. So was Devon. Devon came out with a 9% beat. Revenue did top, which is rare for energy companies this year. Revenue did top 13% year over year. They also beat the expectation, and they also reaffirmed guidance. And Mark, I think this is a report. If Devon is at $50, probably breaks out. Devon's at $40. It just has a little bit of overhead, needs to work that out, but a pretty good report out of Devon. And then the last one here would be the healthcare CVS giant. That's a tackle 25 CVS, and CVS going through a little bit of short-term neutrality, fighting off that low point. And when you're looking at CVS, they came out with a pretty boring report, quite frankly. A doji makes a lot of sense when you have a 5% beat and 2% year-over-year growth, and that's what CVS did. So a walk in the park type of report for CVS. Another day. Let's move on. That's all I got for stocks in the news here today.
Let's fire through commodities really quick. Not a lot of actionable charts out there. We do have some support builds trying to attempt in copper and oil. Gold still hanging out in consolidation. Fire through commodities for us.
Yeah, gold just kind of sitting here, a little bit of a short-term M formation against the backdrop of a beautiful weekly chart. So it's got a little bit of mixed time frame that you got to work out. Doesn't look like the best situation from a support perspective. Either if you're looking at a technical ad, that technical ad would have to be at a lower point or at a breakout type level when you are looking at gold. Now, looking at the other commodities, silver is a little bit in no man's land. It's in between the falling short-term moving averages and the rising long-term moving average. And so you're kind of in that no man's land. You want to work that out. Nothing to see here until we see a little bit of a better reversal coming from that 200-day moving average. And then when you're looking at copper here, copper is just kind of not catching that bid here, Mark. It's sitting at the 200. It can't really fight that 9 EMA. We haven't seen that upward movement in price, but you are sitting at massive support levels, and that is technically violating here today. And so if this does not recover by the end of the week, that's a tough look on the copper side of the equation. And so we're going to need to see that get recovered by the end of the week. But when we're looking at copper, we've been talking about it for the last few days at tackle. We've been tracking it for the last week at tackle, and it has not sniffed confirmation. Confirmation has to happen here, and confirmation at this point would be above 4.2. That's been our number all week long. That's still our number. So you got to fight back, reclaim some of these short-term issues that copper's going through.
Well, listen, we have a fantastic community at Tackle Trading. We will be doing the lounge today, and we do it every day. This is a community where we are helpful, where we provide updated information, where we look at charts, where we provide trade setups. It's a fantastic community, and it has fantastic people in it. If you are interested, come give us a shot. Give us a shot. Don't be afraid. Sign up for that 15-day free trial. See what we're all about. Come join us on the lounge. Check out our programming. You can go to tackletrading.com. And don't forget to like and share this. Help us spread the good word, and have a fantastic Wednesday.